Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, it's a historic, really positive day for the markets. Of course, Osama bin Laden is confirmed dead. It's not only good for the markets, it's good for everybody, everybody's spirit today.
I fully agree, and you know, this is a great day for America, a great day for the soldiers that have been working so hard to try and get these terrorists, get them under control, and finally, even for the families, I know it's not going to help bring them back, but a little closure from 9.5 years ago when we were sitting at our desk, futures started tumbling, and all of a sudden you're seeing smoke out of the World Trade Center, and that was the day that changed the world. And hopefully today gives people a little bit of closure on that.
And particularly good for the markets. We see S&P futures up big here. So in terms of this, what do you do today with this kind of rally? Do you want to be selling into this kind of strength?
I do actually think you will be selling this rally. I don't think we're going to open up 8 handles like we are and close up 20. The S&Ps are very overbought right now. And as traders and as professionals, we tend to sell excitement, not buy it. And right now, this is a very exciting open as far as, for America, but for the stock market, I do think it's going to be a selling opportunity for some professionals. So I've switched gears a bit. First, I want to quickly show you the chart of the S&P. I'm going to go over one more time the reverse head and shoulders. We've given you guys so many different entries, the last one being the momentum trade above the neckline here. I do still think we have higher prices to the 1430 area, but look at this move from 1300 to almost 1370 in like 2 weeks, and then above the neckline in 5 days. So what I'm going to be doing now is I'm going to short the spiders in this up open, but I'm going to continue to hold really good long equities just to have a bit of a hedge out there.
Oh, the next question. Or are you going to be shorting here? So if you were shorting, then what level does it have to come down to? What's that support level that you're going to get, maybe reinitiate some longs?
Well, we need to see the type of action we get. Let's see what we get today. If the gap up today and not only not go higher, but all of a sudden fill the gap and go a bit lower, then you know that we were really that overbought. If I short today and we don't go down, I'm just going to stay within cost average a little bit more, because we talk about retests, Alex. Remember we said, don't chase the excitement. You always get another chance. I don't think we're going to come down and retest this neckline, but we can get back to this moving average. We could see, 1345 to 1360 buy this pullback, or at least cover the shorts over the course of the next, 3 days or sessions.
And Mark Arbiter, S&P Chief Technical Strategist, calling for a top in stocks and commodities by May or June. Would you agree with that? That's a short-term something you have to prepare for as well?
By May or June, that's like a year in time for me. I take it day by day. So we are extended enough, and if we continue to go, then we see it extended, I could see a short-term top, but I do think this year we go to higher prices. But on a micro basis, if you want to trade like a pro, don't be chasing new longs up here and buying this excitement.
All right, let's go